Good evening, I'm Craig Andrus. Thanks for joining us tonight. If you are buying a home soon, chances are there are going to be changes on the way for your loan rates, backed by Fannie Mae or Freddie Mac. And depending on your credit, it could be good, it could be bad. KSN's Molly Jones joins us now to break down the changes.
Craig, overall, the matrix for loan level pricing adjustments is shifting. The Federal Housing Finance Agency said in a statement, some updated fees are higher and some are lower, and there isn't a pure increase or pure decrease for high-risk borrowers or low-risk borrowers, and the price people will pay is going to be dependent on many different factors. The Federal Housing Finance Agency said in a statement, many borrowers with high credit scores or large down payments will see their fees decrease or remain flat. The fees generally increase as credit scores decrease for any down payment.
The same rules that held true before these changes hold true now. The lower the credit score, the lower the money that you have down for payment, the rate that you would expect is going to be higher based on that risk.
When it comes to the price you're going to pay, it depends on a variety of factors.
You need to rely upon your lender because your lender has and will always be, regardless of this change, responsible for making sure that you get the appropriate product with the best rate that meets your affordability needs. That pricing matrix is just one piece of the equation.
Ernest Warren says this change is purely metrics, adjusting the framework to be more accurate with data.
What they've revealed is that there are a lot of people that have credit scores that may not be top tier, that may not have a significant amount of savings, but those loans historically have performed higher than the original risk-based pricing model.
For home buying in general, mortgage banker Randy Pitts says there are options for people with different needs.
There's options out there that don't include putting 5, 10, 15, 20% down. There are no down payment zones. We are surrounded. We're here in Kansas. We're a rural development district.
He says don't pre-qualify yourself because sometimes you're in better shape than you think you are. We have more details from the FHFA linked to this story on KSN.com. Here for you, Molly Jones, KSN News 3.